Talk to me about the price action this week. There was more of a bid to oil on the back of Russia's escalation relative to Ukraine. Where are we in the escalation of risk analysis of war?
Good morning, Manus. Yes, you know, since the summer, crude's been pinned between 70 on the bottom, 80 on the top, more recently 75 on the top. It's geopolitical risk on the upside, macro concerns on the downside. You know, right now, I think we are still complacent about geopolitical disruption risk. Look, before the election, the president and after, the market was rightly focused on the bearish and macro risk, tariffs, trade war, debt, interest rates, and we agree with that. However, my sense is until the election, they overlooked the geopolitical disruption risks coming from sanctions, mainly Iran, maximum pressure 2.0, but also, as we're seeing from Russia, President Biden on his way out is starting to wind up a little more on sanctioning Russian gas, although we don't think the U.S. sanctions this week will be too impactful. They can find workarounds. However, President Trump, we think, will be willing, if necessary, as with Iran, to crimp Russian energy exports to get leverage for deals he wants to cut.
So you expect maximum Iran pressure, but 1.5 million barrels a day, is that going to move the needle for OPEC Plus?
Oh, certainly if it materializes. But, you know, OPEC Plus is not going to make policy based on that possibility, right? They saw that in 2018. Saudi Arabia preemptively hiked ahead of sanctions on Iran that were supposed to be coming. President Trump delayed the sanctions. Prices collapsed. They're not going to play that game again. You know, we only see about 500,000 barrels a day going down from Iran. I think China will be incremental in reducing its supplies from Iran to placate President Trump. But it's possible it goes bigger. But Manus, if President Trump really goes whole hog and they take down 1 million or 1.2 million of Iranian oil exports, that would remove oversupply next year. That makes it much easier for OPEC Plus to return those barrels.
So this is a game of chess, really, in terms of what maximum pressure looks like from this next Trump administration.
You know, that's right. But the incoming advisors from Marco Rubio on down, the White House National Security Advisor, they are all Iran hawks. Right up there with Russia, the priority is to leverage Iran's vulnerability to oil sanctions exports. Their economy is much worse off now than it was in the first term, and get to a deal. So I think you're going to see that pretty soon. And I think until recently, the market was pretty complacent about it.
If we move then to a scenario of where there is some kind of an end to the Russia-Ukraine conflict, as Trump has promised, what are the implications there? Because they're not just going to suddenly turn on, access or accepting Russian oil, are we?
You're right, Manus. No, we're thinking this will end like the Korean War ended, or Cyprus, or Kashmir. They will cease firing along current lines. There will be an armistice, but no peace treaty, no easing of sanctions, and so forth. We think we're far away from any kind of a genuine peace treaty in which you would see sanctions come down. If anything, sanctions are probably heading tighter, not looser.
Just how much tighter could that get on the energy front, Bob?
How much higher could things go? Well, look, Iran is the big wild card. We're coming to a crossroads in Iran. If with Iran and Israel, either we're going to have a comprehensive deal with President Trump, will resolve the nuclear concerns, the regional concerns, terrorism, support for Russia on the one hand, or we fear next year is going to be a pivot point. We think Iran is so close to its nuclear program, Israel is able and willing to attack that nuclear program if it is attacked again. So, Manus, we think next year is going to be a year of decision where it's going to get a lot more bearish, if you will, or a lot more bullish.